The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 126. Get the Nasdaq up 65. S&P's up 15.5. Gold contract down $6.70, trading at $12.70 an ounce. Get silver down 6 cents, $14.38 an ounce. Light sweet crude down 16 cents, $62.94 an ounce. Notes and bonds, they're flat. You get the 10-year note at 124.06, 30-year at 149.10. King dollar up 166 ticks, trading 97.930. The euro is at 111. The yen is at 110.5, and the pound is at 127 to 1 U.S. dollar. That pound is taking a little beating here.
It sure is.
And I heard your update with Tesla.
It's a good day for Elon Musk, I'm sure, reading the news.
God,
hearing that Morgan Stanley says, worst case, $10.
$10. Unreal.
We'll see.
Pretty sick.
It is.
Folks, let's get over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as you do each and every Tuesday, Wednesday, and Thursday. And don't forget, every trading day right here, you want to understand options, option strategies, futures, outstanding program, 11 to 12 Eastern Standard Time, no matter where you are. Just go right to YouTube, put TFNN in there. And if you haven't test-driven yet the Thinkorswim platform, real easy to do. Over to our website, hit the banner, bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. I have a quick question. How much time do we have? Because I have 2 hours of things to talk about right now. Do we have enough time?
It's so true, man. I know.
Let's start with some of the good news. And that is, this tragedy that happened with Boeing seems like now Boeing is saying that birds caused this, and not a failure of their plane, but a bird strike, which can happen to just about any plane. Now, that's in Ethiopia.
Okay.
In the Ethiopian crash. But the bad news is Ethiopian Airlines is coming out and denying that. So now there's a little back and forth between them, but Boeing stock's getting a nice boost from that. That being said, Kohl's earnings this morning are just annihilating the retail sector.
Yes.
And everything is heavy because of Kohl's, which with a big miss and big guidance lower. So with a bunch of retail earnings coming out of the bell today and tomorrow morning, this is going to be an interesting day for retail for sure.
Man, that Kohl's, they really hit that thing, huh? Holy cow. Yeah.
Yeah.
$7. And
Not pretty.
It's interesting. They're doing that deal with Amazon.
I was waiting. I know.
Yeah.
I guess it's not as beneficial as the market might have hoped.
No.
Not yet,
Well,
at least.
I guess, their hope was that more traffic from people, returning their Amazon goods would cause, people to do some shopping there. And at least so far, remember, it's probably the early stages of rolling it out across the board, but so far, not working.
Yeah,
Right.
we read an article. I think it had over 1,000 people some days, Kevin, and I think it was Chicago and L.A. They had it already going on. 1,000 people at one Chicago location could show up for a return on a day, and they'd all try and get that 25% coupon in their hands, right? But maybe people are just dropping it off and going back home. It's
Right. So far, clearly, Tommy, they haven't got the effect that they were hoping for.
Yeah.
Well, it's interesting, too. If we go over to the home business, the home building business, you can see existing sales, cool down in April, but yet Toll Brothers is coming out after the close.
Yep.
Toll Brothers rejected lower price this morning.
Yeah, and some of these home builders in a tough last 30 days are actually higher. Very quietly, we're in the middle of a little home builder recovery here. They're all significantly off their lows. And
that would make sense with the interest rates. I mean, the bottom line is that we all thought we were going to stay at 3.5% 8 months ago. And that baby, that 10-year is right down there pretty good. So.
Yeah.
And, for your listeners, you basically take the 10-year yield and add 2 points.
Right.
And that's what the general 30-year mortgage is. So at 3.2, you're talking about 5.2%. Now you're down to, significantly lower,
2.4.
about 2.3% or 4.3%. Pretty significant, and that should hopefully help some of the home builders.
Yeah, that's pretty cool to know that you take the 10 plus 2 points. That's
and it's just a general
no,
idea.
I'm with you, but
Ballpark.
yeah, right. No, I can see that. There's no doubt. Yeah, it's pretty cool. And
so I mean, we're hoping that some of that is, I think the other thing that home builders have to do, they have to get that average price down. I think the home builders that are doing well are the ones that selling at those lower price points.
Right. No, you can see whether it's New York, excuse me, California, those high-priced houses, man, they're having a hard time selling them. I mean, I think,
right.
And you know what I think it is, Kevin? I think that a lot of it's like the top end of the baby boomers, right? Well, they bought all these houses, and it's like, okay, hold it. Now I want some cash. And it's like, okay, well, who are you going to sell it to?
Sure.
It's, it's like people don't need $10 million houses anymore. Even, it's intriguing, man. I mean, some of those hits that they're taking on those big houses are amazing,
And obviously, Tom, that in these high-tax states like New York, Chicago, where I live, those areas and the SALT tax deduction that comes with those states is sitting on real estate prices pretty heavily here.
Oh, it is. There's no doubt.
The benefit, though, of where you live in Florida.
They're all coming here. I tell you, it's amazing, especially where you live. The Midwest, Chicago, Washington, D.C., a lot of people coming down here from there.
New York,
New York, New York. They get over the other coast, but there's no doubt. Yeah, and it totally makes sense, man, because the amount of bread that they save is amazing.
Definitely.
Tom, it's real simple. It's economics 101. Money flows where it's treated the best.
Yep, no doubt. Well, we're coming into the holiday weekend. You can see this S&P can bounce around 15 points in about a heartbeat, man. It looks like we're just going to be leveling out here for a little bit and just getting ready for summer trading.
Yeah, it's pretty interesting, the kind of the slow drift in VIX down to right at what we talk about all the time, guys, is the all-time average for the S&P 500 in terms of VIX, right about 15.39, 15.4. And there
crazy.
It is, sitting right there as we get to Tuesday of this week. We'll see what it does the rest of the week.
Right. No, and you can see, what's the weather like in Chicago right now, Kevin?
Cool. Very cool.
Yeah, because Tommy and I were talking about this yesterday. It's like we know that everyone's waiting for summer. And normally we know Friday's going to be slow, but I bet Thursday's going to be a little slow too. Not in the morning, but in the afternoon. Do you know what I mean? It's going to be everyone's been waiting for Memorial Day, right? Yeah.
I agree completely. First Memorial Day that I can remember in 30 years, Tom, that I'm spending it in Florida because the weather is just too cool here.
Oh, well, it's going to be hot in Florida, Kevin. Be careful what you ask for. I think the high is going to be 96 degrees across the board this weekend.
But you got the trade winds, Tommy.
That's right. That's right. And you got the water, man. You got whatever you want. Exactly.
Water, don't worry about it.
That's right.
Put some SPF Irish on.
That's right, man. Put a hat on, protect that forehead, and you're golden.
That's awesome.
Exactly.
Folks, right here, 45 minutes from now, outstanding program. You really want to wrap your head around option strategies, great program. Kevin, you have a great one, safe one. We look forward to the program in 45 minutes.
Thanks for having me on, guys.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. All right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 143. We get the Nasdaq up 63. S&P's up 16.5.
They're having a weather discussion in the den. We got snow out west, we got rain up north, and we got 96 degrees coming at us in Florida.
Yeah, and today's gorgeous, though. You know, like last night. Last night was beautiful, right?
Yeah.
You know, it was
Yeah, we're still in kind of the early stages where the sun is really intense when it does get into the night, but
Right.
still our lows are going to be like 74 degrees. But as Kevin said, I'll take it in a heartbeat, man. It's beautiful. Go ahead. Where are we going?
Coles.
Coles, yes. So I got the screen up here. Yeah. So the earnings, to dig into actually what they did, right, or did not do, basically. So earnings, fiscal year, 515 to 545. They were looking for 604. For the quarter, earnings per share, 61. They missed the estimate, 67. This, I think, is probably a huge one they're looking at. First quarter comp sales, minus 3.4. The estimate was almost flat. That is quite a miss on comp sales. And sales, 3.82. They missed by about 110 million, coming in estimate 393. Margins on the board, but that comp number, man, you know, that's quite a number. And maybe, you know, maybe that's why they are so desperate to make a deal with Amazon or something like that. Because in fairness, that deal just got announced. We haven't seen any of the results from that Amazon partnership getting spanned out across the nation. It was really just a pilot with, I think, Chicago and maybe LA, and they're going to expand it out. So
yeah, so let's take a look at this.
And I think JCPenney, though, we can jump around because I think they might have missed as well, both of them.
Really?
Yeah. Maybe.
Okay, so well, that's traded $1 anyway.
That's
right?
what I was like. It's only 12 cents, but that's a huge. Yeah. See, they got Kohl's, JCPenney sales miss. There we go. I think.
Yeah.
Oh boy. So they were comp minus 5.5. They were looking for minus 3.9. They lost 46 cents. The estimate was only 38. So they were supposed to have a tough quarter. They had a tougher quarter than they were even hoping for.
Right.
With more losses, decreased comp sales. I'm ticking down one more. Yeah, see, they had them expected to lose 39. They lost 48, and I'm sure there's more buried in there.
$1. So they're very close to, you know, I think the rule is if you trade under $1 for 90 days, that's when
believe you're right.
They
It's-
kick you off
it
the
is some-
exchange. Look at this thing. Oh, this.
Oh, they're in rough shape.
Oh yeah, this is going out of business, man. This is wow.
They're in rough shape.
Holy cow.
Because they're in this weird niche, right? Where they're a big store in a mall.
Yeah.
But they don't have a brand name like Macy's, which even Macy's is struggling or something. But you know, it's what do you go to JCPenney for? Probably affordable clothing, right? You know, yeah. But there's better options. That's Nordstrom Rack, right? Marshalls. If you're going that route, I think that's what you're seeing come in there. Can you go back to JCPenney for a second? I just want to see what the market cap of that company is. One more time. One more. 323 million, as in almost nothing, right? Yeah, that was because $1 is scary. I knew it wasn't going to be a big amount of money because you don't want your stock trading at $1. If they had any market cap, they would have probably done a reverse split, but they can't do a reverse split because they only have 316 million shares outstanding.
Yeah.
I mean, what are you going to do? Reverse split and have 80 million shares outstanding and somebody buys them all tomorrow? Or, you know, they don't, but that's the point. Yeah. And what about Kohl's? What is Kohl's to compare? $9 billion company, so quite a different perspective.
Yeah. And JCPenney in 2007 is an $87 stock.
Yeah. No, the world has changed in 12 years in terms of retail and discount retail.
So Tesla.
Oh,
look at this.
Speaking of changing in a heartbeat.
This is pretty intense, man. You know, it's so funny that I heard you in the news, right?
Yes.
And I didn't even read that article this morning. It says, because I said that used to be a joke. But
oh, yeah. Oh, no.
I saw it come across. Well, you know, my take is that we're on the way to 141 anyway. It's just the high spike down there. So
why can't we go down here? No, I'm kidding. That's even 3 times it.
That's the number. You break that, that's the range.
I mean, pretty remarkable.
You break that, and then it's all over.
I mean, just before, I just wanted to say, I mean, you're back. It's remarkable that you could have been in a stock like Tesla for 6 years.
Yes.
They've done remarkable things in 6 years, and you've made no money.
Well, that's the danger.
Right. It better be dangerous.
In the afternoon show yesterday, that what happens because now everyone from 6 years ago now is just breaking even. Because under that level, that's when the accelerates. Because people say, what just happened here?
And it's not like there's anything good on the horizon, it seems like. It's not like you'd say, you know what, but they've gotten a tough shake in the press. I've been a long-time holder, and I'm going to ride it out here because I know I'm going to be successful in the future. Poof, that's a tough case to make.
It is.
Yeah.
Let's see. Tesla's bear case share estimate slashed to $10 from 97 by Morgan Stanley analyst Adam Jones, citing increased debt load, increased dependence on China, and potential for further negative news. The broker rates Tesla equal rate with.
Yeah, so they have 230. They're just saying, listen, if it hits the fan, you know, and things go as poorly as you can imagine, I mean, the stock's almost worthless.
Yeah.
Does it? You know, he doesn't say it's going there. He's just saying it's possible. It's quite a range, and I'm sure he chuckled as he put out this headline. You got to know that this is going to reverberate when you say Tesla could go to $10, right? But guess what, man? It's not a joke. And if it's not 10, maybe it's 50. And if it's not 50, maybe it's 100. That's still a 50% haircut when it just took a 50% haircut from almost $400.
Right.
And they do. They have problems.
And I mean, this year, they're still saying they're going to lose 67 cents.
And it seems like every time, the profit's always a year and a half out.
Yeah.
As in, like, this just keeps shifting. So, you know, a year from now, are we going to have losses in this column and profits are going to be forwarded to 2022?
Right.
That used to work when Tesla was ramping up production and said, don't worry, it's all coming down the line in 2 years.
Right.
And that's the problem. They can't say that anymore. It's now or never. And so far, it's not now.
Tense.
It is. It sure is.
Big
you got
numbers.
the trade war going on with them. You got huge competition coming in from every single big car maker in the U.S. and the world, man.
Oh, yeah. I mean, now electric cars are normal.
Yes.
You know, where
and they did a lot to push that, which is credit to Elon. He's a genius, man, and I don't think he's hip to the nuts and bolts of a COO type production operation of that, and he'll probably hand that off, I imagine, at some point, because they do. They don't need a cheerleader right now. They need a manufacturing genius to put it out.
Let's go look at that gold contract. So They got gold down at 1269. I think 1267 is that low it's going after. Yeah, 1267.30 is the low of what's that?
May 2nd.
May 2nd.
Yes.
140,000 contracts. So that's going to be some contract volume down here today.
Okay.
So we got a rejection thus far. The GDX. We look at that GDX. It's holding up. Interesting. Yeah. So the equities are still holding better than the metal. And the gold, I mean, the dollar index, folks, I mean, this thing, it wants to test it. It just keeps, volume keeps dying on the vine. It's pretty amazing. Look at this today. 6,500. And 98,085. We haven't hit 98, but...
Right there by a hair.
Right there. Yeah. It's going to whack that baby. 877-927-6648. We have the Dow right now up 127. NASDAQ is up 63. S&P's up 15. Come right back.
The TFNN Memorial Day Tiger Dollar Sale is here. From now through Memorial Day, you can get up to a 40% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN good or service. Whether you're a current subscriber looking to add instant savings, or you're a new listener or viewer that is considering signing up for any product in the near future, now is a great time to get your Tiger Dollars and lock in dramatic savings on all TFNN products and services. We only have a sale like this a couple times a year, so don't let it pass you by. Tiger Dollars are available in 3 purchase options with a 20%, 30%, and even 40% bonus. Once you purchase your Tiger Dollars, you'll be able to apply them to your TFNN account, and then they are automatically used for all your recurring subscriptions going forward, making it as easy as possible. For all the details on this Tiger Dollar promotion running through Memorial Day, visit the front page of TFNN.com and get your Tiger Dollars before this sale passes you by. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. The Art of Timing the Trade charts has a special running for 1 week only. From now through Memorial Day, you can save 25% off your first month, and we'll ship you a hardcover copy of Tom O'Brien's best-selling book, The Art of Timing the Trade. The Art of Timing the Trade, your ultimate trading mastery system. This software package is the fastest, easiest, and most accurate way to analyze stocks using Tom O'Brien's trading philosophy. It automatically provides you with Gartley and butterfly patterns, swing points, retracement levels, confluence areas, expansion targets, and the power law vector indicator with just the click of a mouse. The scanner searches thousands of stocks each day and delivers a list of every Gartley and butterfly pattern it finds automatically. Just enter the promo code BOOK at checkout. This sale ends Memorial Day, May 27th, so don't let it pass you by. For all the details and to save 25% and get your free book shipped today, check out The Art of Timing the Trade charts on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 136. We get the NASDAQ up 64. S&P's up 16.5. Let's go take a look at these housing numbers. So let's see what we got here. Let's see what... This is existing sales that we're talking now. Okay,
yes.
So sales of previously owned U.S. homes unexpectedly cooled in April, the 5th drop in 6 months, signaling a rocky start for the housing market this quarter amid a still tight supply. Okay, so let's see. Contract closings fell 0.4% from the prior month to 5.19 million. Annual rate. The medium sales price increased 3.6% from a year earlier to 267. That's a big medium sales price, isn't it? I mean, that's the whole country, right?
Yeah. Yeah.
Yeah. So there's going to be a lot of cities in there. That's the highest on record for the month of April. Yeah. Okay, the drop, also the 14th straight year-on-year sales decline. It's interesting, right? Look at that. So also,
Well, no, you're getting monthly, as in, so it would be. I mean, not. It's a big number, but that just can mean for the last year they've been declining, right? 14th year-on-year. You could have a monthly number.
Okay.
And for 14th straight months, the year-on-year sales have declined.
The drop.
Does that make sense?
14th straight year-on-year.
Yeah.
Sales decline.
It's just
I read that as that's
okay.
the 14th year in a row that's a year-on-year decline.
No, that's not what it says.
Okay.
It's not, because this is talking about annual rate right here. Contract closings fell 0.4% from the prior month to an annual rate. So they're talking about the rate falling on an annual rate from month to month. And this is the 14th straight year-on-year decline as we go on the month to month, as each number comes out each month.
Supply of homes was up 1.7% from a year earlier. The overall level remains relatively low at 1.83. Okay, so let's see.
It's interesting, right? You have short supplies, so less sales but higher prices.
Yeah, right.
Right. It's continuing. Yeah.
So demand remained solid. Properties remained on the market for an average of 24 days, down from 26 a year ago. That's pretty good. You sell a house in 24 days, you're doing good.
Record low in data going back to 2011.
Yeah. Let's see. So economists on Bloomberg projected a 5.35 median pace of sales. Yeah. Home purchases fell. Okay, home purchases fell in the south and the northwest, in the south and the northeast, and were unchanged in the Midwest. The West was the only region with a record gain. The current pace would take 4.2 months to sell all the homes in the market. Still not bad. Interesting. Compared with a 3.8 in March, realtors to see anything below 5 months supply is a sign of a tight market. First-time buyers made up 32% of sales, down from 33%. Existing home sales accounts for 90% of the housing. Interesting. Yep. Well, there you go. And so this afternoon, folks, we're going to have Toll Brothers coming out with numbers. So Toll Brothers this morning, this looks to me like it wants to take out its high. So we'll see. It's been up here for, when I say the high of the last 4 or 5 months here. So let we pull this back. You'll see it's just been sitting here.
Yeah.
And they're looking for, well, number-wise, this is $1.5 billion, and then 75 cents to the bottom line.
Okay.
And I believe Toll, this is the higher end of the housing market, really.
Yes. Yeah.
Luxury houses both move up and empty nesters in several regions of the United States. I think they
not the first-time home buyer type.
Yeah, I think they break this down too. No, well, they get city living breakdown, but that's small compared to. Yeah. Let me pull up Lennar.
I'm sure they might have something in the city, but most of it's just those luxury homes, yeah?
So Lennar, that already must have come out with their numbers, because that's 7.3, the next one. And I think they Lennar breaks it down by region, though. Yeah, they do. So you can see Lennar, the West, 8 billion, East, 6 billion, Texas. Look, they take Texas by themselves, 2.4. U.S. Central, 2.3.
Hey, that's more than 10% of their whole revenue, right? Well, they took in 20 billion, 2.5 billion right out of Texas.
Pretty wild.
Yeah, Texas is a big state.
It is a big state. Yeah, California.
I know they don't segment out California though. It's probably because Lennar, they're not the super luxury. I don't know if you can find as many spots in California maybe that suit that area versus Texas.
Yeah, no doubt about that. They're talking about the weather.
Yeah, we got them going.
I wonder if they had this up in the Bloomberg as to there's a couple mountains open for Memorial Day in Colorado skiing.
Hey, they got snow. Why not, right? That's what they're talking about. I saw people on social media, posting about some snow out there. And, yeah, I guess so.
I love it.
Why not?
That's
Get those slopes going.
oh, that'd be. I can tell you.
It's going to be 96 degrees here. Pretty cool. People are going to be skiing over the weekend.
I would love to be able to just press a button and go right from here and go skiing, then press a button and then be right home.
Not quite that easy, but in fairness,
the Jetsons aren't here yet.
You press a button on the computer, your ticket's waiting at the airport. It's not that far.
Yeah. So some of these high volume equities out here, you know, we went through Tesla. Tesla's getting smoked. That's down $6.50. You get Advanced Micro up 49 cents. We get GE, that's flat. Micron Tech's up 88 cents. Kohl's, they're getting toasted. Sprint was up yesterday. So Sprint and
A little bit of a roller coaster on those conflicting news stories.
yeah.
You know, basically they were both correct, but in terms of you got the FCC and the DOJ on opposite views of that merger between Sprint and T-Mobile. So we'll see how that shakes out.
Yeah, no doubt. You get Intel's up 84 cents. So if we look at any of these, just go. Any of the chip stocks, folks, you're going to see these things. Oh, I'll show you right now. The SMH. The SMH has confirmed an ABC structure on the way down yesterday. So you blew apart this B point. Look at this thing. Okay, so your B point here had 17.6 million shares, 104.91. Bingo. You were parsing into it Friday with 19 million, and then we blew it away last night with 18.8. So you get a nice ABC structure on the way down. So, you know, just as the S&P, I think the S&P is in a complex one. NVIDIA, oh, let's see. Who's?
AMAT, AMD.
Yeah, right.
Intel.
Let me go this way. So if I go like that, would that be right? Yeah, holdings.
There we go.
So, yeah, Intel's the top one. Intel, Taiwan, Qualcomm, Texas Instruments, NVIDIA, Broadcom.
Yep.
You got them all in there.
ASML, AMAT, LAM, NXP.
So, look at AVGO. Oh, look at that. AVGO did it too.
Huawei used a lot of their chips, right?
Oh, yeah.
That's what I think
Right.
across the board.
Right.
And,
Look at this
so it's a
thing,
big one.
And so the A point on this is 323 to 288. So,
35 bucks.
okay, and 35 off 307. What, 275, right?
Yeah, 272. Yeah.
We already hit.
268. Done.
Oh, interesting. Yeah, right. That one's done.
Well,
yeah.
it's quite a fall off from
No, it is,
from
exactly.
Friday to Monday alone,
Yeah.
right? We went down
Right.
pretty substantially.
And then if we take a look at this, yeah, it looks like it's on its way down to 264. See what happens then. Big numbers, man.
That's for sure, man.
877-927-6648. We have the Dow Industrials trading up 142. NASDAQ is up 72. S&P's up 17.5. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 143, Nasdaq up 74, S&P's up 18, and yeah, we got so Aspen. Let's see, is it Aspen that's opened, or Aspen Mountain Ski Resort in Colorado announced plans to reopen? Over the
this weekend. Yep,
this weekend,
and that joins, I guess, Breckenridge Ski Resort as well as Arapahoe Basin Ski Area in Keystone, currently open. So yeah, they got a few options out there in Colorado.
It says 13 inches. So
yeah, up to 13.
The region overnight with the reports 13 inches of new snow in the Colorado Springs area. There you go. We got all those tigers out there in Colorado right now. I know Peter's just saying that snow will be gone by the market close. Oh, that's interesting.
Yeah, right. It's going to be a short reprieve, I'm sure, as summer is coming.
I know, it's pretty cool. We got some feedback here in the den, too. Like, one of the tigers has his house for sale in Charleston. And he's saying that the $250,000 houses are going, really well. But the $500,000 price tag is they're backing down. And Charleston is, as he said, one of the best markets in the country. So these interest rates, that's what keeps housing going, folks. Those interest rates are going to be, well, they're low, and I suspect they'll stay low. Look at this. This just popped. Let's see what we get going. So you just had the S&Ps. We just popped from 17 to 21. Yeah, this thing, we're right back to the highs of yesterday.
Sure, and that's really pre-market, like super early. That's 9 o'clock at night, exactly. Sunday, actually, yeah.
So when you're looking at this S&P, folks, this is where, let's see, I can do the futures. But my take is that we got a complex ABC down. And what will happen if it's a complex is that we look at the futures right now. So you come down. We came down from the highs with volume. You went topside last week with light volume. But then what you did here, watch, I'll show you. Like when we came down yesterday, if you want to see how anemic it was on the way down, you had a contraction of volume. And we did, we popped the Friday with 916, yesterday 808 on the way down. That's what sets up basically, another bounce. And that's what also sets up a complex one, because what will end up happening, when I say complex, we haven't even broken the B point yet. What I just mean is that I can see us going all the way back to these highs of last week, next couple of days, and then making a run again. This is going to be the building cause to go after that B point. And because the SMHs already did it, what you want to be looking for is that what other either equities or sectors look like they're on the verge of doing it or actually did it. And then the probability goes much higher that is exactly where we're going to go. So at this particular point, it's holiday trading, baby. And holiday trading, and as Kevin, it's pretty wild that the VIX was like, what do you say, 15.39 was the average, right?
Yeah, 15.39, 15.4, I believe, for the historical average. Not the recent average, though.
Yeah.
We've been so low, and then we got our spike a little bit, but
Look at that.
yeah.
Boy, those spikes just never last, man. Yeah. Now that means that I said that it will last.
If they last, you better watch out, man, because that means the market's moving like 2% every single day, which is why it's usually some type of turmoil that gets sorted out in some way or fashion, right?
Oh,
It's
yeah.
either like gangbusters to the upside or gangbusters to the downside. The market kind of prices in all this risk that it's had for a while that wasn't priced correctly, and then things kind of settle down a little bit, and so you see the VIX calm down again.
Yeah. Apple's got its work cut out for it. You know?
I was going to say, it's having a little bit of quite a day today, though.
Yeah, you know,
Up more than 2%.
Well, see, this is interesting. So this is almost a complex ABC, but what happened, folks, is that when we broke the B point yesterday, you didn't break it with volume. So we get down with 38 million, B point has 57. You know, so bottom line, what you want to look for, like in an Apple now, is that as I suspect it will go up and try to test the 192. If you test that with lighter volume, then guess what? Then it's going to go after this whole area again, because in both cases, you know, we get volume there of 57. You get good volume here of 38, but not enough. You know, and I might take there is that that's what seems to be sticking out like a sore thumb. Well, it is sticking out like a sore thumb. January 3rd. That's a what's that? 142. Some of these numbers are big numbers if they really get down there. I mean, was that 225?
Yeah, not quite. 215, I think, was the high. Yeah.
Big numbers, man.
Yeah.
There's no doubt about
Oh,
it.
definitely. It's been quite a run from Christmas Eve up until today. Yeah.
Yeah. And we'll go back over to that dollar for one of the targets for a second. So the dollar, I expect it's going to get hit. You know, when you get this close to them, they just like to get hit. It's, you know, 98.085. But you can see that the contraction is pretty dramatic of volume. I mean, look at this. If we go back, that's Thursday, you had 12,000 contracts. Friday, 8,600. Yesterday, 7,300. And, you know, it's 6,600 now. It just died in the vine. So,
Yeah.
if we go over to the euro, we take a look at the euro, it's going to be just the opposite. Pushing into the lows. Yeah, that's what it's doing. Now, we don't have the volumes on this, but that's, you know, we'll see. This is where you should see reversals in a lot of these. The real question is going to be, well, let's do the pound, too.
They start voting early June.
Early June, huh?
Oh, we're going to come back from Memorial Day, and we'll have Brexit on our minds.
Look at that. Yeah, I mean,
The market doesn't like the idea of a fourth vote on the same thing that might risk a hard Brexit if it fails. I mean, that's what you're seeing priced in there,
yeah,
for sure.
yeah. And,
Because that is what they'll kind of be voting for.
oh, let's go take a look at the yen, too. So the yen, what has happened is that the yen, folks, is really what has just saved the gold market in general. I mean, you know, the metals went down, but this yen, when that yen got down to 109, you know, that basically saved it. Now we're at 110.57. Now, I suspect the yen's going to try to get us this 110.96. That's ice. That's where it broke down from. You know, we'll see how it handles it. But I think the longer basis of this yen wants to get a lot stronger. Yeah. And what does happen when the yen gets stronger, for some reason, the metal likes to go higher. The gold market. Silver's still a problem. You want to see a problem? Look at this. Hecla, this is so surprising. Well, nothing surprising, but Hecla hit 132 today. I think it's 87 is the 2008 low. Look at that, or 98. I mean, it broke this number yesterday, the 145. Serious problems, man.
Oh, definitely.
And what's so crazy is that, you know, you're talking, like, this has been on the New York Stock Exchange, one of the longest stocks, like 125 years, some outrageous deal. And, you know, you're talking $1.44 stock, but they take in money.
Yeah.
You know?
The problem being these columns over here, I would
Yes.
say, in terms
All
of
loss.
no matter what they do over here, right? They're lucky if they barely break a profit, if not, you know,
Imagine-
make 10 cents, lose 10 cents, make 10 cents, lose 10
And
cents.
he's taking in $500 million.
That's what I'm saying. What's the point of owning a company if you take in $500 million and you can't make any money? And that's not a growth company.
No.
As in, you know,
No.
you're a gold company.
Yeah.
You better
Right.
be taking in some cash if, yeah.
Dow Industrials up 158, NASDAQ up 82, S&P's up 21. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 180, NASDAQ up 93, S&P's up 24. Let's go to our man John in Detroit. What's going on, John?
Hey, Tom and Tommy. Love your show. Listen to you every day. How's it going today?
Morning, John.
Great.
Thanks for calling, man.
Appreciate it.
Hey, I want you to take a look at the symbol GD for General Dynamics.
GD. Okay, so let's see what we got here. Okay, so the low for the year is 143. The high is 208. Pays a 2.3% dividend. So do you own this? You're looking to buy it? What are we doing?
Looking to buy it, take a long-term position on this.
Okay.
The all-time high was 230 back in March, I think, of last year.
Yeah.
So it cratered down to about 145 when the market crashed in December.
Yeah.
And this is one of those things that if you look, compared it to the Dow Jones Industrial, like I use the DIA, for example.
Okay.
It runs a lot stronger than the Dow.
Yes.
And I'm just curious if this is the right time to buy. They just got almost like a $500 billion contract from the Navy for submarines, and some hedge fund just bought a chunk of it. So I was wondering what you guys thought.
You know,
I was looking. The volume wasn't too strong, though. on
Yeah,
the upside so
it's
far.
real close. I mean, you're at 170. Can it test 143 again? Yeah, it can. But it's still a good-looking stock. I mean, when this came down, well, I'd wait. I'd try to wait because you get down there with 41 million. You were going against the breakout of 39. But this is set up that, that spike last week. I mean, that last month is a good spike. That was the beginning of trying to get through that supply line. That supply line is pretty intense there. Of that
From October last year.
Yeah, October. Just give it some time, man.
Well, thank you very much. And, I use your advice on watching those supply lines. So thank you very much, buddy.
Thanks,
Appreciate
man.
it.
Have a great one. Have a safe one.
Thanks, John.
Stay right there, folks. Fast Market coming up next. Thanks, Bill.
Thanks, man.
Go get him, folks.